If this is your first time here, be sure to hit the subscribe and notification button so that you don't miss out on future content. And of course, like the video so that it gets shared with other individuals. And if you're interested in making an M1 portfolio, my referral link will be in the description. Now for today's video. So this video was doing a little bit about talking about timing bottoms. And for the most part, people always say that you can't time a bottom. But what you can look at is you can look back at different points in which stocks were at very low value, where you see a lot of value was lost. Apple, this was prior to the pandemic. We see that Apple basically was showing a little bit of weakness, right? So looking at Apple stock, and of course this is after the split, we're able to see it. So we should be able to see that Apple was starting to pull back. This was back in January of 2020. And we see a little bit of a pullback, right? You can see it here where the stock multi hit what looks like $76. And then finally we see a retest, right? We see a little bit of a retest finally with a gap through. And so this was kind of like the stock market, right? Stock market during that pandemic time, and this was back in March, you can see the exact same thing. The market very much, typically charts will do very similar things, and you see it right here, right? You see it here indicated within this chart, where for the most part, the market could not break above roughly 28K, right? We see it here. This is, what is this, 28, just about a little over 28K, right? So you see it here, market touches 28K, sells off, 28K, sells off, retests previous levels down here, hits 28K again, sells off again, tries to push through, and we see a little bit of an indecision, right? When you see these little candles like this, if you utilize candles, it typically notes, the buyers didn't win, the sellers didn't win. So the market is basically unsure of the direction, and finally the market changes direction, it goes to the upside, and then at some point the market retests. Typically you will see at some point the market will retest. This is probably like almost over a month from, let's see, what was it, the breakout here of like December, and then you see the stock again retest, but it's not till almost the end of January, right? Literally January 31st, the stock retests, comes right back down. The market retest comes right back down. Now, talking about I guess timing a bottom, you usually have several days. It's not that the stock shoots down and then immediately slingshots right back up. There's usually a little bit of indecision that's going back and forth. What you'll usually see to the downside is you'll see these huge spikes in volume, right? You'll typically see these huge spikes in volume. So there's a lot of people selling, there's a lot of people buying, and of course, you're wondering, how do I know we've achieved a bottom? And again, you're never going to get the lows of the lows when it comes to a bottom, because it takes a while for a bottom to make itself known. It's typically with a retest, right? So we see it down here where the market kind of bases, and it happened over several days. You can see it right here on March 16th, 17th, 18th, 19th, 20, 23, 24, 25, 26, all the way up until April 2nd, actually April 3rd, and then you finally see the market move in a different direction. And so we see a little bit of a base that forms within the market. You start to see that big volume right here, it starts to die down, right? We don't see as much selling as we did, obviously within these big red candle days. You can see that there's a lot of selling that's going on, but it's not driving the stock down. And so that lets you know that while there's a lot of people that are just dumping their shares, there's a lot of people that are there that are basically holding up the market at this particular level. It's where the people who are understanding value are stepping in and saying, whoa, right, you guys are overselling, and they're just sitting there accumulating. They're accumulating all of these shares for people that are basically panic selling. And so we start to see, even though you might see bigger sell volume, right? You can see basically almost the equivalent sell volume here, but it doesn't push the market down. So we get multiple days where we have really big sell volume, but it doesn't drive the stock down. And again, we see some fairly decent sell volume, but again, it doesn't drive the stock down. So the buyers are coming in and they're stepping in and they're starting to accumulate shares. They're saying basically that they find the market oversold. That's what that should let you know as a long-term trader, or if you're looking for swing trades, you'll start to see this right here, where you'll start to see these little indecision candles, right? The market sold down, but then it came back up. The buyers came in, and then the market, a little bit of indecision, right? So you have multiple days where it's not like it just happens immediately and you're like, "Ooh, I didn't even see it." It typically happens over a long period of time, typically several trading days. For this particular bottom that happened in March, there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, roughly 15 days where you had the opportunity to start accumulating shares in the market at around between 20 and 21K in the Dow. And so you had multiple days. It wasn't just like it happened in an instant and you just missed the opportunity. So it's important when you start to notice these things that you start to think of a strategy. Remember, support and resistances. What's the volume looking like? Am I starting seeing volume coming in where I'm seeing a lot of buying, right? And that buy volume is driving the market up, right? So it's not that we're seeing buy volume and then the market is not moving, but we're seeing buyers step in, and even though the buy volume, right, you can see the sell volume right here, it's not that much more. It's not that much more than the sell volume from the previous day. But what we're seeing is that now that volume is starting to drive the market in a different direction. And so even though you'll see other days where there's multiple days of selling, but there's no weakness, right? In essence, people are starting to hold the market up. And you can look back, right, in 2019, you see another similar trend right here, where we're looking at it on the daily, where the market sold off in the end of 18 right into the beginning of 19, and you see you've got 1, 2, 3, 4, 5, 6, 7, 8, roughly 9 days before the market starts to shift, where the sell volume is very high. You can see it right here. The sell volume was the highest on this day, but yet we see the buyers starting to step in, and nowhere near the amount of sell volume that was going into the market. But we start to see the market starts to change direction. And so it's not, when you're looking at the market or when you're looking at a particular stock and you're thinking, how do I know where we're reaching what is referred to as a bottoming? And it's typically where you'll see the market will come to a particular price point, and then it will retest, where sellers will step in, but the sell volume, even though the sell volume is fairly high, you can see that the sell volume is still fairly high, but it's not able to drive the stock back down, or the market back down to previous lows. And the moment there's buy volume in, that buy volume starts to rush the prices to go higher. Lets you know that there's not enough sellers to basically hinder these buyers that are coming in. Same thing that's happening here. There's selling that's going on here, but just not enough selling to push the market back down to where it was previously low. You can look back multiple times. Looking back, we can go back to all the way the crash of 2008. Looking back at multiple years, even here, right? Looking here in 16, where the market fell from 18,000, came all the way down to about 16,000. You can see multiple days. It doesn't just happen in an instant. Same thing here, where the market slingshots back into the other direction, where you see this multiple days where the market starts to create a base, right? There's enough buyers that are stepping in to halt the sellers from pushing the market lower. We see the exact thing here. And so it's important to understand, when you're thinking, okay, are we at a bottom? I don't want to miss it. Most of the time, it's not that you miss it, It's that you're not planning for it. You're not putting in place your strategy for buying whatever stock that you're in, right? Because typically we know eventually the market will trade higher, right? Let's look back at the crash of 2008, right? 2008, 2009, we can see it right here where the market came all the way down, right? We were at roughly 14,000. The market came all the way down to about 6,500 within the market. But when you actually look at the chart over, this was literally months where the market, for the most part, ended up forming a base all the way down here. We see that the market ended up forming a base down here. Lots of volume that was coming in, and over what looks like from about the beginning of March all the way to almost the end of March, we see the market starts to form a base, and that previous low, right? Because for the most part, the market was holding roughly around, let's say 7,700, 77, 77.50, but the market showed weakness, right? The market showed weakness and eventually broke. And we see a similar pattern right here, where the market came down, subsequently could not drive the market all the way back down, and we start to see the buyers step in and start to support basically that base. You should be able to see that right there, right? That little base that gets started right here, and of course here, and then the market starts to drive higher. And so that's typically when you're looking for either bottoms, and you can basically see the exact same thing from the tops when markets start to show weakness, right? You can see that right here, multiple days where the market could not break above roughly that 14, about 1400. You can see that here, and you can see that here. So that lets you know that there's weakness over here. Where is particularly the base? Right here, right? Here's your base. The market couldn't break above that 12.7. You see its support right here. You see the market support itself right here. Again here. And then again right in here were multiple days where the market was trading above and then below what looks like 12.73. And then you see the exact same thing again here. We see a retest, right? We see a retest to try to break above, and then subsequently the market collapses. What was the bottom, right, of this little trend, right here? What was the bottom of that little trend that you can see right here now becomes an area of resistance right there. And so this is how you know, should I be taking more stock? Does it look like the market is bouncing here? Or should I hold my short, right? Should I hold my short? What am I waiting for? And you're just waiting for confirmation. It should be fairly easy enough to see where what was an area of support, where the market was basically bouncing, subsequently becomes an area of resistance for multiple days. And it doesn't just happen one day and the market shoots down. It's multiple days. And that's why in many of my videos, I've talked about the need to exercise patience, because these things take time. It takes time for basically the market to draw in enough people who are thinking the market is going to trade higher, and then the sellers come in waves and those drive positions to the downside. And then you have the people who are long now trying to sell out, and it just flushes the market down. And like I said, you can go through whatever year and you'd basically be able to see it, right? The crash of 2000, you can see it here where the market forms a base again. Should be able to see that right there. We triple bottomed here, here, and basically again here, and then here, and then finally we start to come back up. And so the market basically holds. And so when you're in something like this, if this is what your stock look like, then you don't necessarily have to go all in. But when you start to see these little, where the market is basically showing you areas of support, or just basically what it means is that buyers are stepping in. buyers are basically stepping in at, you know, Dow 7600, right? More buyers are stepping in. They're absorbing all of the stock that the sellers are basically dumping on the market, and the buyers are coming in and they're just give it to me. I'll take it all. 7600, I'm a buyer, right? Because the market is oversold and they have a lot of liquidity, so they're just sitting here accumulating all of these shares. And of course, if the market were to subsequently break down because the volume of sellers overwhelms the amount of liquidity that the buyers can have, then of course the market would trade to the negative side, and you see it right here. But then very quickly, with over the next couple of days, the market just comes right back up. And so sometimes you have to give yourself a little bit of wiggle room and wait. Don't worry about what happens intraday or maybe over the periods of 1 or 2 days. Wait for the direction. Wait for a direction. There's a lot of people here. Same thing with the top, right? You can see that right here, where previously we multi-traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days before we were able to break this price point, right? The market was basically holding below 9,000 and it traded there, came all the way down. You can see that in this candle right here. You should be able to see that right here in this candle where the market traded through, and then it took several days before finally the market just flushes down to the downside. And then you see the exact same thing again. Over several weeks later, the market tries to retest, multiple days where it tries to retest here, and then it falls right back down, right? Same thing here where the market again tries to push for that 9,000 and it falls short, and again right here. Right, so this lets you know that my weakness, right, my resistance, where people are just selling the market, maybe the news isn't that great about what was going on with the economy that time. Maybe people didn't have enough faith that the economy was going to recover. And then, of course, you see again another attempt to get to 9K that just falls short, and then the market sellers just step in and they just drive the market all the way back down. And then finally we see the push above 9K right there. And then subsequently we look at the chart and what happens, right? So for all that time that the market had such a hard time, and this is happening over months. This is not something that is happening very quickly. In this period of time, looking back in the early 2000s, the market traded below 9,000 from July of, well, it looks like July of 2002 all the way till June of 2003. So roughly a year and a half. It took the market to break 9,000 back in the early 2000s. And so once the market was able to break that price point, as you can see, for several months, they tried to trade the market down, as you can see right here, and literally from June of 2003 all the way till August, right? So it's June, July, August. For just about 3 months, people kept trying to sell the market down below 9,000. And when an area that has been an area like a price point that has been hard to break through, typically the longer it takes for the market to break through a specific price point, the stronger that area of support. So you can see that there was multiple days, right? You can see multiple days, and there's probably more days in this period of time where selling was going on than buying. You should be able to look at all these days of selling compared to the amount of days where the market was up. It looks like much more. There was probably a couple more days of selling than there were of buying, but yet the sellers were not able to step in and break 9,000. The buyers were saying, we are moving higher. The market is trading higher. They're just sitting there accumulating. All the people who are just trying to sell the market down, people who are going short, and the buyers are just stepping in. The buyers are just stepping in. More and more buyers are stepping in, and then we see the exact same thing here, where the market had a hard time breaking above 94, or you could say 92, and then again, where we see the market support itself, right? We see the buyers supporting itself right here. And of course, these are all things that you have to take into consideration when you are a long-term seller, or when you're trying to buy and position yourself Because maybe now when you're just starting, you've only got a couple of shares, maybe you've got a couple of hundred shares. But if you actually start to do really well in the market and you start to accumulate more shares, typically you want to go to buy the shares obviously as cheap as possible without alerting the market that you are a buyer. And so these are some of the technical analysis. These are basically the fundamentals of technical analysis that are important to understand for those who are looking to get into a market, especially if you're new to day trading, swing trading, and of course long-term investing.